Welcome to our accounting series. In this video, we'll understand what accounting is, why it's important, the basic terms, the accounting process, and how businesses use accounting to make financial decisions. If you are a beginner or want to revise your basics, this video is perfect for you. 2. What is accounting? Accounting is the systematic process of recording, classifying, summarizing, and interpreting financial transactions of a business. In simple words, accounting helps you know where the money came from, where it went, and what the business earned. Key objectives of accounting: to maintain a record of business transactions, to determine profit or loss, to know the financial position, to provide information for decision-making, to comply with legal requirements. 3. Why accounting is important. Accounting plays a crucial role in every organization. Here's why. Helps in decision-making. Management uses accounting data to make financial and operational decisions. Shows financial performance. Profit and loss statement shows how the business is performing. Shows financial position. Balance sheet shows assets, liabilities, and capital. Helps in budgeting and planning. Helps in getting loans and investments. Banks and investors rely on financial statements. Legal compliance. GST, income tax, TDS, PF, ESIC all depend on accurate accounts. 4. Basic terms in accounting. Let's go through the most important accounting terms every beginner should know. 1. Assets. Resources owned by the business. Examples: cash, bank, machinery, land, stock, debtors. 2. Liabilities. Amounts the business owes to others. Examples: loans, creditors, outstanding expenses. 3. Capital. Owner's investment in the business. 4. Revenue, income. Money earned from business operations. Example: sales, service income, rent received. 5. Expenses. Costs incurred to run the business. Example: salaries, rent, electricity, purchase. 6. Drawings. Money or goods taken by the owner for personal use. 7. Debtors. Accounts receivable. People who owe money to the business. 8. Creditors. Accounts payable. People to whom the business owes money. 9. Purchase. Buying goods for resale. 10. Sales. Selling goods to customers. 11. Stock. Inventory. Goods available for sale at any given time. 12. Voucher. Proof of any business transaction. Invoice, receipt, debit note, credit note. 13. Journal. First book of entry where transactions are recorded. 14. Ledger. Classified book of accounts. Assets, liabilities, income, expenses. 15. Trial balance. A statement to check mathematical accuracy of ledgers. 16. Financial statements. Profit and loss account. Balance sheet. Cash flow statement. 5. Types of accounts. All accounts in accounting fall under 3 categories. 1. Personal accounts. Relate to persons or organizations. Rule: debit the receiver, credit the giver. 2. Real accounts. Relate to assets. Rule: debit what comes in, credit what goes out. 3. Nominal accounts. Relate to income and expenses. Rule: Debit expenses, credit incomes. 6. Accounting process. The accounting cycle includes 8 major steps. Identifying transactions, business-related only. Preparing vouchers, bills, receipts, invoices. Recording journal entries. Posting to ledger accounts. Preparing trial balance. Making adjustments. Outstanding expenses, prepaid expenses, depreciation. Preparing final accounts. Trading account. Profit and loss account. Balance sheet. Closing the books. 7. Double entry system. Every transaction has 2 sides. Debit, credit. Example, you purchase furniture for 10,000 rupees in cash. Furniture AC, debit, asset increases. Cash AC, credit, asset decreases. This system ensures accuracy and financial control. 8. Final accounts overview. 1. Trading account. Shows gross profit or loss from buying and selling goods. 2. Profit and loss account. Shows net profit after deducting all expenses. 3. Balance sheet. Shows financial position, assets equals liabilities plus capital. 9. Conclusion. Accounting is the language of business. Understanding basic accounting helps in running a business, filing taxes, managing personal finances, building a career in finance. In upcoming videos, we will cover journal entries, ledger, posting, trial balance, and financial statements with examples.